Okay, good morning, everyone. Good afternoon, wherever you may be. We're going to get right into the stock market technical analysis. Going to start off with triple Qs today, and we're just going to look at what's going on in the markets. I'm not seeing a whole lot of kind of brand new trade ideas, but there are a couple key levels on some trade ideas that I do want to point out. So stay tuned for that. Guys, drop me a thumbs up. And if you're, as I'm going along, if you find value in this content and you want to learn, kind of what I've spent many years learning, I put that all into a course and I price that affordable for all. If you don't want to pay for it, you don't think I know what I'm doing, then maybe just follow along for a little while and just kind of, see if the trades work out. All right, guys, we're going to start off here with triple Qs on the tech sector. I'm not seeing a whole lot today in tech. We have the 200-day simple moving average up here at 368.01. So that is a possible area where we might want to run up and hit. I think we'll probably get rejected up there. Another key level to watch is right up here at about 370.784. That was kind of your key area of support back here. You can see it was support here. And then we finally broke, and that's when we started the downtrend. The downtrend is now, we've kind of broken that downtrend. So we're no longer in the downtrend. Obviously, we've been in an uptrend. And so we could see a pullback, maybe a pullback to, 342.50 it looks like, or potentially down here to 332, and then a continuation to the upside. Just in general, I'm kind of low conviction on where, at least in the short term, where I think the market's going to go. And that makes sense because we're kind of in the middle of the range. We got a wall of resistance right up here, and we got some support down in here, and we're just right there in the middle. So not an area that I'm super interested in taking a trade, but I am, kind of watching the price action to see where we go next. If you want to narrow it down to the hourly chart on triple Qs, this is the rally that started last week, and we've been in this upper trend line on the hourly chart. Started to put in negative divergence here on the RSI and the PPO, and we just got a breakdown of that trend line. You can see it broke here and was treading, but there's actually a sell signal on the short term. So that might mean we're going to pull back to some support zones. And again, I've got one right there at 342. It's about 342.50. So that might be a short-term trade idea. But again, that's just the hourly chart, so that might be a 1 or 2 day kind of thing. Just keep an eye on the price action there. And what you might want to watch for is a break of this level right here, 352.40. All right, you can see that was kind of your short-term resistance, and then it was support once hit. So again, an impulsive break of that might be a sell signal down to that 342. Small trade, maybe a 2% or so, 2.5%, depending on where you grab it. Okay, the S&P 500, same pattern. You had this bullish falling wedge. We broke out. All right, we're starting an uptrend basically, but right at the 200-day moving average on this 200 simple day moving average, and we're actually slightly below it. Yesterday we popped above it. Today we're just grinding around there, just battling it out right now. So again, low consensus, low conviction on where this heads next. Since we're kind of in the middle of the zone, resistance I feel like is right up here, about 460. And we got some minor resistance right up there. Zone of resistance, and then support is, kind of right down there. And so we're right in the middle. All right, so no real read on where it heads next in the short term. IWM. So IWM had this downtrend line here, started to break out, but it's just treading water. We don't see any real impulsive breakout. Did have bullish divergence on the momentum indicators. I pointed that out down here. When we were trading down here, I said, look, we might want to start lightening up. Everything looks like, everything's set up bullish. We got to keep an eye on it. And that's really why I pretty much closed all my shorts down in this area. I'm glad I did, because obviously we've seen pretty strong rallies over the last couple of days to a week. IWM, though, has a wall of resistance right there at 208, 209-ish. And again, that's just your big sideways trading range that we traded in over a year. And that was resistance. Once we broke below, it's resistance here, and we just ran up and tagged it again. So that might be just another objective short. It is objective to short it right there, and that is why I did short that yesterday. So I am short IWM. Now, if we recover this and we start to rally, then, you know, we just stop out and, you know, you want to lose small, so you stop out. But again, that's objective to short there, so I'm looking for that leg down. Okay, semiconductors. They look like they're probably one of the more bearish setups just in the short term, and that's because we rallied right into resistance. So SOXX, you can see this was our bullish or bearish rising wedge here. Lower trend line is really what I'm focused in on. And you can see a lot of chop through here. We broke, still quite a bit of chop. But this rally, this over the last couple days to a week, we just rallied right up into the 200 and right into resistance. And so far, that's held. So this is where I'd expect us to roll over and start to trade down. But you'll probably want to look to see the other markets, the broad markets, the triple Qs. You want to see that to start to break down as well. All right. Here's a semiconductor TSM. Again, this one, I pointed this out as a trade idea. So this was a key level of support, 107.95, about 108, okay? And you can see all the tags, and I've got it, you know, I've kind of got this big range here circled, but all the tags of support right there, there. Finally, it broke, and all we've done over the last week is rally into resistance right there. So it's objective to short. We're just slightly off of that 108 area now. But it is definitely objective to short in this range for a continuation to the downside and a continuation of the downtrend. Again, this one, we've got some key levels we've pointed out. You know, you've got a zone of support down here at a small level of support, about 95.50, and then a better level of support here at 76.67. Yeah, so those are kind of areas to watch. Okay, let's look at gold. This is gold bullion here, so just kind of the price of what gold's trading at. And you've got, you know, just consolidation basically over the last couple days. Trading sideways, really going nowhere. We're looking for a potential move down to support at 1840. Right in there, really good support. So if we get that move, and it's going to be quick, all right, because everybody's watching for that level. You start to make a move down into that level, that's where I'd be wanting to buy again on gold. So we might not get it, all right? I don't know if we're going to get it. So I still have several gold mining positions looking to add on this position, on this move down if we get it. So things to watch for on that one. Oil's continuing to rally, so that should continue to put pressure on tech. I think there's a trade here to watch in terms of if oil goes up, tech should go down. The reason, my justification behind that is oil moving up should continue to increase the CPI and inflation readings. And as inflation continues to rise, it continues to put pressure on the Fed that they have to hike rates faster and more and by more. And rising interest rates is bearish for tech. So that's kind of the play. I think if you see oil continuing to rise, then tech should continue to sell off. Okay, sorry guys, had to take a quick break. So I'm just going to finish up the video with Tesla. So Tesla, potential zone of resistance right up in this area right here. All right, so that's your former trendline support on the daily chart. You can see support right there. There are lots of tags of that trend line. There's one right there. And then we finally broke. And this rally over the last week or so has been really impulsive, virtually straight up. So I think definitely a lot of short covering involved. You know, you don't typically see bull market rallies that are straight up and impulsive like this. A lot of the time, there will be short covering involved as well. But buy the dippers and short coverings create moves like this. Zone of resistance right now is that trend line. It would be a back test of it, you know, and I don't know if it's going to get all the way up there, but if you do see that way up there at, you know, 1106, potential objective area to short. Again, we'll want to look for potential, you know, negative divergence on the hourly chart, things like that. But, you know, that's what I'm watching for. And in general, I don't see too much else. Cage C, you know, looks like it's starting to rally a little. This one's been tricky. This one's been really choppy. I still think it's going to go gap fill up here at this right here at 47.72, big gap from back in 2019. And, you know, we're kind of flagging out. But again, it's been a really whippy stock where it, you know, looks like it's going to break higher and then just gaps down and then runs up. And it's not following a lot of consistent trading patterns. So that's, you know, I've kind of given up on that one. Looking for stuff that's a little more easier to trade. So I'll keep an eye out for anything else. You guys drop me a thumbs up and I'll catch you on the next video. Bye.